hope you're enjoying yourself. I've been fired up. I've been fired up since the beginning, since the time of doing this remastered thing. I've been wanting to do it for a while, but a lot of things have passed. And it's actually a blessing in disguise, because people think that I just did this remaster because there was a supposed hacker getting into our system. No, I've been wanting to do this since November, but I wanted the VIX to come first. I wanted the Rumbus Mastery to come first. And then all this Wahala happened. So God bless you to the person or the people who thought that by, you know, scaring us, quote unquote, by leaking course content, that we're not going to be able to do anything again. Everybody knows that I've always got material that will keep outliving me. So it's good. And I'm glad you are enjoying this. So let's get into the crux of this. We're now 1 hour in. You're going to notice that time with me runs very, very quickly. So let's get into it. We're going to talk about what Forex actually is. What is Forex? Now we're beginning to learn something. My definition of Forex, not everyone's definition of Forex, but it's okay. Forex is a game or a war or a competition between two teams. Now, I don't think my definition has changed all that much since the beginning. It's a game or a war or a competition between two teams. And what are these teams fighting for? Okay, we understand what Forex is. There are two teams that are fighting over something. What are they fighting for? They are fighting over value. They want to be the one to dominate in a particular area. And value can only go two ways. Value can either depreciate or value can appreciate. It can't go sideways. Value will always go up or it will go down. And these two teams are making sure that either one is fighting for value to appreciate, which means go up in price, or two, the other team is fighting for the price or the value to depreciate, which means that the price is going down. When you remember it this way, understanding Forex becomes a lot easier, because the numbers and all that stuff makes it a bit confusing. So we need to identify what these two teams are about, why they are doing what they are doing, and how we as traders can benefit from these two teams fighting. So there is a team that is looking to go up in value. So I'm going to put an arrow going up. And there is a team going down in value. And remember, value can either go up or down. So one team is always looking to push up. No matter what the circumstance is looking to push up. And if it meets that description, that means the candle color typically is green. Green is life, green is happiness, green is growth. So when something is positive and value is going up, it's going to be looked at as a green color. Now, not everybody uses candlestick charts to be able to read charts. In the village, we use candlestick charts predominantly. When you get to a higher level, we introduce the other charts, which are bar charts. We look at Renko charts. We look at Heiken Archie. We look at line charts. But what we use candlesticks for, especially when it comes to beginners and mastery, is that these Japanese candlesticks speak a language that we can decode and understand. And more on that will be shown later. So if price is appreciating in value, it's going to translate as a green colored, let's say, block for now, okay? Now, if the other team is looking to push value down, then the candle or the block color is going to be red. And that means that for that period, for that time, for that brief moment, price has depreciated. So when you're looking at a candle, no matter how big or small the block or the body is, if it is green, it shows that that period value has gone up, even if it's by 1 cent. Or if it's red, it shows that for that period, the team that is pushing price down has pushed it down. and value has depreciated. So that is how you know what the job description of each team is. Okay. Now let us look into depth the characteristics of each candle and why they are such. Forex, you're going to know, is named after animals because the Forex market normally mimics the movement of how animals operate. So you're going to hear a lot about, especially in crypto, sharks and whales. In news, doves and hawks. You even hear about antelopes. You hear about all these different deers, all these different things in Forex and or chart reading is named after a particular animal. But these two teams are known as the bulls and the bears. So we're going to talk about the team that appreciates in value first, known as the bulls. And what happens is that price or the value starts at a particular point, and at the end of that period, it should close or it should finish higher than where it started. And that is exactly how the bull operates, okay? When I remember first coming to Africa describing bulls, everybody was looking at me funny because I was speaking confidently about bulls. Why was I speaking confidently about bulls? Because every time I asked the question, have you seen a bull before? Everybody would shake their head and I'll be confused as to why. And it just so happened that when I was teaching, cattle were coming by and they all had horns. And I said, so what is that? And they said, Papa, it's a cow. Now I was confused, and I'll tell you why I was confused. Because in Australia, we were taught that a bull is a male cow that has horns. A female cow does not have horns. But in here, Africa, anything goes. If you're a male, you have horns. If you're a female, you have horns. As long as it's a cow and it has horns, it's a cow. So if I say bull and you don't know its function, think about the cow. When it wants to attack, where does the cow or the bull put its head first? When it wants to attack, when any horned animal wants to attack, where does the head go first? Somebody help me out. Everyone knows down. Okay, so the head goes down first, and the reason why it goes down is because it is of the belief that the lower it goes down, the higher the attack or the harder the attack will be. So just like the way the bull operates, every candle that is bullish will start low, and then at the end of that period, it will finish higher than where it started. That is the description of the bullish candle. If it follows that description, the candle should be green. When you grow up in the Lord or grow up in your Forex, you can change the colors. But we are starting with green and red. So if it starts low and finishes higher than where it started, it is a bullish candle, meaning that price has appreciated in value. Now, the start of a candle has a technical name and it's called open price. It's where it started, where price opened in the beginning, okay? And where it finished is called closed price. So the start of a candle is open price. The end of the candle block is the closed price. And we're talking about a bull candle, bull or bullish candle. Team bull. And you're going to be shocked in your trading journey that most people even identify as a bull trader or a bear trader. Sometimes you don't want to be a seller because you're used to buying all the time. And if you are that, I encourage you to keep that discipline. Okay, it's better to be on one team than to be on both. But that's a story for another time. So these elements of the candle are not all that is there, okay? The distance between the open price and the closed price is known as price itself, or the body of what we call a candle. So the distance between the open price and the closed price, that distance, whatever that distance is the body. That is this block area I was alluding to before. But there are other parts of a candle that you need to pay attention to, and they play a big role in their game when it comes to analyzing the market. And these things are called wicks. W-I-C-K-S, wicks, or sticks, or shadows, however you want to remember them, but we call them wicks, okay? And this displays that there was tension in the market in that candle, but price failed to close there. So an example might be that price opened at this area over here, then it pushed down. The bears started pushing down, but the bears couldn't keep the control of where they wanted to be. And so the bulls then took over and were able to push up and gain more value, but the bulls could not hold their strength all the way at the top. The bears were able to close it down, and then they ended at that period right at the close price. Then the next candle, if it's a bullish candle, will start where the previous candle closed. The next open price of any candle starts at the last candle's close price. So if it's bullish, it would look like this, starting there and moving on up. Okay, so the bottom of the wick is known as the bottom of the wick is known as low price. That means price went to a low area. Sorry, two spaces. Low price. That means price went to an area, but it failed to close there. So that's low price. So sometimes when you're trying to assess how the market is looking, you will want to assess the low price, or what we call low of the day. So when you're doing an analysis and you say, okay, at this particular point in time, this is the lowest that price has ever been, it may give you an indication that price may not go that low again for the trading day. But that's a topic for another time. So the top of the wick is called high price. That means price went to a high area, but it failed to close there. If you're with me on this so far, type in a 1, 1, 1. I hope no one's getting tired yet. So let's wrap this up. The bull candle is the bulls are the team that are fighting for price or value to always appreciate. Okay, and so if there's an open price that is low and a closed price finishes above that, that means that there has been a positive yield in price. Now, the distance between open price and closed price is known as the body. And then the volatility that is made when price is able to go to a high point or a low point, but is unable to close there, is called high price and low price. And this is all in relation to the y-axis, which we will cover later on in our trading view topic. Okay, so let's talk about the other team and what the other team represents. We are now looking at the opposite team. And the opposite team is red, which means that they're fighting for value to go down. And they are called the bears, okay, or bearish. Now, I know that there are not a lot of bears in Africa, so I wouldn't fault anyone for not knowing how a bear fights. But normally, most bears walk on all four paws. But when they want to fight, they will get onto two paws and fight with the other two paws, their feet or their hands, okay? So it is of the belief that the higher they stretch their hand, the more force will come when they're putting their hand back down or when they're slapping their opponent. So that's why this team is named the Bears, okay? So when it wants to fight for value to go down, it is starting this time at a particular point, and it closes lower than where it started. Not like the bulls where it starts low and finishes high, okay? The bears start high and finish low. Let me put it over here. Okay, so what is starting high? What is that called? If it's to start high and finish low, what would that area be called? If open price is at the bottom for the bulls, where should open price be for the bears? Top or bottom? So we have open price, and then we have close price. Okay, so those are the only things that are opposite when it comes to the body. When it comes to high price and when it comes to low price, they are at the same place. However, the open and the close of the candle are at different places. I'll go through this with the trading view operations, but when you're looking at high price and low price, you're looking at it being in relation to the y-axis. See how price is on the right-hand side, and you see that price is always appreciating. You don't see it switching from the other end. For example, you don't see 161 ever being at the top. Price is always rising. So when you're talking about high price and low price, this is in conjunction with price being labeled on the side. But when you're talking about open price and close price, you're talking about being in relation to the body of whether it will be a bullish candle or a bearish candle. Does everybody understand that? Drop in a Y or a yes if you do, so that we can move on. High price and low price is in relation to the y-axis where the price units are, and the price units are appreciating. So when you're talking about what is the high of the day or what is the low of the day, it's getting you to reference the wick to where price is at on the side. But when you're looking at open price and close price, you're looking at where each candle has started and has finished. That is the difference between the two. I know a lot of people get confused by that, so I wanted to explain this. So this is what Forex is. This is a competition, it's a war, it's a game for dominance of value, and the bulls are always looking to push price up. There's no such thing as a bearish bull. There's no such thing as a bullish bear. A bull will always go up, a bear will always go down. Another thing to note, when it comes to teams, there is a reason why I have designed it like this. Take note of this. The bullish team is always on the left-hand side. Write this down. I'll explain what that means. The bullish team is always on the left-hand side. The bearish team is always projected at the right-hand side, which means whatever the currency, the commodity, or the instrument, if that instrument is on the left-hand side, it means that they are the team of the bulls. If there is a team written on the right-hand side, it means they are the bearish team. Here's an example. Euro USD. This is what you call a currency pair. And how a currency pair works is that they get 3 or 4 letters of the team that they are representing. If you're a soccer fan, you'll know how these abbreviations work. So they'll get 3 or 4 of their letters to represent that team. And then the other side will have 3 or 4 letters to represent the other team. So what I have done is I put a vertical line in the middle and I separated the euro and the USD. And you can see here on this currency pair where 2 currencies are put together to pretty much mean these are the 2 teams that are fighting, euro versus USD. What we are saying here is that the euro is representing, for this example, the euro are representing the bulls and USD is representing the bears. What this means on the chart is that every red candle you see is showing the strength of USD. If it's pushing down, it means that USD is pushing so that the euro stops appreciating in value. So USD's job is to make sure that euro doesn't appreciate. Euro's job is to make sure that USD doesn't accomplish its mission. So when we have Euro USD, we're now saying that, okay, every green candle is representing a strength in the euro. Every red candle is representing weakness for the euro, but strength for the USD, which means that if price is now going down, someone help me out. If price has now gone down like this, which team is winning? If the charts are showing that there is a depreciation that's going on in value, which team is winning? One at least 10 responses. The bears are winning, but which currency is the winning one? There you go, USD. This is the easiest way to be able to break down how this works. Instead of saying all these jargons like base price and quote price and nah. It's easier doing it like this because no matter how it's arranged, all you care about is which team represents the bulls, which team represents the bears. Look at all these different combinations. No matter how you do these combinations, it's still the same. Here we have it. No matter the combination, when you split these up in the middle, the currency that's going to be mentioned either with 3 or 4 letters is going to represent the left-hand side, which is the bullish team. The next 3 letters are representing the bearish team, and they're always looking to fight for price to go down. When you understand it like this, it makes it a lot easier. Let's look at some charts so we can familiarize ourselves with how this works. All right, let's start here. Let me get my markup off. And for this example, this exercise, I'm going to put my watermark on so everybody can see the currency pair. Just give it one moment as I set up. Appearance, watermark. Okay, I'm sure everyone can see this, okay? So we have Euro and GBP that's on the screen right now. And what I'm going to do is I'm just going to highlight certain parts of the chart, and you're just going to tell me which team is winning in that part, okay? That's all I want you to do. We're not going to get all technical about, oh, well, they were winning this part here, but they were, no. I'm going to highlight a section. You're going to tell me which team is winning. Are we ready? 1, 2, 3. What's happening in this section? Which team is winning? Give it to me. Which team is winning? The bulls, yes. Euro, yes. So euro is on the left, GBP is on the right, and you can see here price overall is going in an upwards direction. Yes, you saw that the GBP, the bears were fighting back, but overall, look which team won. Very good. Let's try that again. In this part here, which team won? Bears, 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 GBP, bears, bears, bears. Very good. Well done, guys. All right, let's look at another chart. Canadian dollar, JPY. Different charts, but philosophy is still the same. Canadian dollar first, Japanese yen second. In this section, which team was the dominant team? Someone said bears. Or did I read the wrong part? Bulls, very good. The Bulls are the Canadian dollar. All right. Now, next one. Which team won over here? Bulls or Bears, or Canadian dollar or Japanese yen? Very good. Well done. In this section over here, the newest section I just colored, which is the color of, I guess, aqua. Which team won over here? Very good. So as long as you know Bulls on the left, Bears on the right, you're going to be just fine. Are we all cool with that? Drop a 222 if we are cool with that.